The stock market is having a bad year in 2022. The combination of high inflation and slowing economic growth has understandably made investors nervous. Moreover, past market winners, such as technology and aggressive growth stocks, are no longer delivering the same returns. However, extensive economic research has shown that stocks outperform most other major asset classes over the long run. Today's video will discuss the top 15 dividend stocks for the 2022 recession. Watch this video until the end and subscribe for more uploads like this. Here we begin. Number 15. Boston Properties, Inc. Boston Properties is one of the largest commercial office REITs in the country. It focuses on high-end properties in historically commanded high rents, such as New York City. Boston Properties' price-to-funds from operations ratio is now just over half of what it was before the pandemic. In the meantime, the dividend yield has risen to 4.7%. As a result, BXP stock is a steal for investors who believe in the future of high-quality office buildings. Number 14. Coca-Cola Euro-Pacific Partners PLC. Coca-Cola Euro-Pacific Partners is a major international bottling partner for Coca-Cola Co. It began in the 1950s with a group of Spaniards bottling Coca-Cola and has since grown through mergers and acquisitions. It is now the world's largest individual Coca-Cola bottler, with operations spanning much of Europe, including key markets such as Germany, France, Spain, and the United Kingdom. Coca-Cola Euro-Pacific Partners shares are down 25% year-to-date, a significant difference from Coca-Cola, which is up to 10%. Long-term investors, on the other hand, may find this to be an excellent time to purchase quality European companies such as Coca-Cola Euro-Pacific. Number 13. Northrim Bancorp, Inc. Northrim Bancorp is one of Alaska's few major homegrown banks. The Alaskan banking market is isolated with only a few national banks present. Because of the lower level of competition in the market, local players such as Northrim can enjoy much higher net interest margins than their lower 48 state peers. With the price of oil rising, more money should flow directly to Alaskan consumers. Northrim is benefiting from this prosperity. This raises the bank's dividend yield to 4.1%, while the stock trades at less than 9 times forward earnings. Number 12. Suncor Energy, Inc. Suncor is much more than a large energy company. For one thing, it owns a significant amount of oil refining and distribution assets, implying that Suncor's fortunes are not solely dependent on crude oil prices. Suncor's existing already in operation production stands out as a significant competitive advantage in a world where governments and environmentally conscious investors have placed many constraints on new oil production assets. The stock is trading at about 5 times forward earnings with a 4.2% yield and a large stock buyback program. Number 11. VF Corp. VF is a clothing and footwear company known for Vans, The North Face, and Timberland. The company is also a dividend aristocrat, which means it has increased its dividend for at least 25 years. This summer, VFC stock has fallen to new lows amid concerns about declining consumer spending. With a recent share price decline, the stock trades for less than 14 times earnings and yields 4.6%. Number 10. Verizon Communications, Inc. Telecom companies are generally one of the most reliable sectors for high dividend stocks. However, some investors were scared away by AT&T Inc.'s shocking dividend cut last year. As a result, the association may have unfairly punished Verizon. To put it another way, Verizon is not the next AT&T. Meanwhile, VZ stock is trading at less than 9 times forward earnings, with a 5.9% dividend yield. Number 9. Southern Co. Southern is a rapidly evolving power company. Southern used to generate the vast majority of its electricity from coal, but in recent years it has shifted to natural gas, nuclear, and renewables. Some new generation facilities such as Southern's nuclear power plants have been significant cost overruns. UBS recently upgraded the Southern stock as a result of favorable regulatory action on its Vogtle Unit 3 nuclear power project. The current dividend yield is 3.5%. Number 8. Life Storage, Inc. Real estate investment trusts or REITs can perform well during inflationary times. This is especially true for self-storage companies like Life Storage. This is because storage units are typically rented month to month, and Operators can quickly raise prices to adjust to changing market conditions. The company also forecasted revenue growth of nearly 14%, far exceeding previous projections. In addition, Life Storage recently increased its dividend to 3.3%, which is good news for income investors. Number 7. Banco Latinoamericano de Comercio Exterior S.A. Poladex, or Banco Latinoamericano de Comercio Exterior, is one-of-a-kind bank. It is a commercial bank that primarily funds short-term trade loans. Consider short-term loans to assist industrial, shipping, or other customers. Paladex's success depends on commercial growth in Latin America rather than the housing market. Paladex is now building a more aggressive loan book to capitalize on new commercial opportunities as some regional economies have reached double-digit GDP growth rates. The stock trading at less than 8 times earnings and pays a 7% dividend yield. Number 6. Shell PLC. Shell, like Exxon Mobil, has become an absolute cash flow machine as energy prices have risen. As a result, the company's earnings for the second quarter increased dramatically to $11.5 billion, up from $5.5 billion in the second quarter of 2021. The company generated $13.7 billion in free cash flow, which was nearly double the figure from the second quarter of 2021. However, despite being on track to generate $50 billion or so in annualized free cash flow, Shell's total market capitalization is currently only $200 billion, and shares are trading at an estimated 5.3 times forward earnings. Number 5. Edison International. Edison International is a public utility company based in California that generates and distributes electricity and specializes in renewable energy. Edison International reported strong financial results for the second quarter of 2022. At the end of the quarter, the company had $446 million in operating cash flow and more than $122 million in cash and cash equivalents. In addition, the company's total assets surpassed $75 billion, up from $74.7 billion at the end of December 2021. Edison International paid $524 million in dividends in the first half of the year, up from $494 million in December. The company pays a quarterly dividend of 70 cents per share, for a yield of 4.04%. In July, Barclays gave an equal weight rating to Edison International as the firm updated its price targets for the North American power and utility sector. Number 4. Citigroup Inc. Citigroup Inc. is one of the largest banks in the United States. In addition, Citigroup is one of the most diverse global financial firms with a franchise that includes investing banking, retail banking, and a significant international presence. Citigroup has also established itself as a leading value-oriented dividend stock. With Berkshire putting nearly $3 billion into Citigroup, it's clear that Buffett believes in the company's turnaround, and that vote of confidence is significant given Buffett's long and successful track record of investing in the American banking industry. As a result, Citigroup is now trading at less than 8 times forward earnings, yielding 4.1%. Number 3. Walgreens Boots Alliance Inc. Walgreens Boots Alliance is going through a different period. First, the company's Boots acquisition in the United Kingdom did not go as planned. Meanwhile, Walgreens' sales trajectory has slowed after a strong period at the height of the pandemic. All of these are valid points, but on the other hand, Walgreens is trading at 7.6 times forward earnings, and it's been incredibly consistent over the years. Walgreens has increased its dividend for 46 consecutive years, and the stock currently yields 5.3%. Number 2. Unilever PLC. Unilever, a manufacturer of packed foods and consumer goods, is an interesting position. It has struggled to achieve significant revenue growth due to shifting consumer preferences in recent years. However, the current inflationary environment has altered the situation. As a result, Unilever sales increased by nearly 9% in the most recent quarter, a significant improvement over previous results. However, inflation should moderate over time as Unilever profits from the price increases it has already implemented throughout the supply chain. The current dividend yield is 4.1%. Number 1. Exxon Corp. Energy has been one of the stock market's few bright spots in 2022. In recent weeks, natural gas has reached decade highs, Likewise, crude oil has fallen slightly from its spring peak, but it is still trading near $100 per barrel, significantly higher than where it was in recent years. Investors may believe it is too late to invest in Exxon after its recent surge. However, shares are still trading at less than 8 times forward earnings, with a 3.6% dividend yield. Let us know your views in the comments below and subscribe for more.